There are 6 legal tax benefits, not loopholes, not mistakes, but they're tax benefits that are hiding in the tax law. They're just not that easy to find, to pull out, that most business owners completely miss. I'm not talking about shady tricks. I'm not talking about cheating. I'm talking about strategies that the government actually encourages you and wants you to use. I've helped thousands of entrepreneurs legally cut their tax bill in half or more using these exact tools. It's a good way to put it. These are tools in the tax law. And if you're paying more than 15% in tax, you're leaving money on the table. And this video, this really short video, will show you just how to fix that. Now, how often do I see entrepreneurs stuck in the wrong entity? What does it really cost them? It is the number one issue I see with entrepreneurs. What's an entity? Think about, how do you own your business? You know, Warren Buffett said once that he didn't want to own anything, but he wanted to control everything. That's really what an entity does. It allows us to own the entity and control the business, but we don't own the business directly. We own XYZ Corporation, XYZ Limited Liability Company, XYZ Limited Partnership. That's what we own. And then the limited liability company or the corporation owns the business. So we own the entity that owns the business. That's what we're trying to do. So the challenge is that if you have the wrong entity, there's multiple bad things that happen. First of all, if you don't own your business the right way, that could be a red flag for an IRS audit. And it could be a really big red flag. Or it could simply increase your taxes dramatically. It could as much as double your taxes, because you could be paying Social Security taxes on 100% of your income, anywhere from 15 to 16%. Wouldn't it be nice to not have to pay 15 or 16% on top of your income tax? Or what if you could actually set up your business so that when you sell it, you never pay tax on the capital gains? Most business owners, our biggest asset is our business. When we sell it, it's going to be a big capital gain. What if we could eliminate that tax? What if you could eliminate that tax? See, these aren't loopholes. These are things that are literally tools that are right in the law, that are not just legal, but the IRS wants you to use them. Let's say you're a solopreneur, right? That means you own your business. You're just small business. Maybe it's a side hustle, whatever. And your accountant says, well, you just set up a business bank account. You don't need a separate entity. Report it on a Schedule C. That's on your personal tax return. Your 1040 is a Schedule C. And, don't worry about it. You're only making like $20,000, $30,000, $40,000 anyway. What a mistake. What a horrible mistake. What horrible advice. So let's say you're making $40,000 in this side hustle, in this business, okay? And you're on a Schedule C. Let me tell you 2 big problems. The first one is having a Schedule C on your tax return is the biggest red flag you could have. The IRS hates Schedule Cs. Why do they? Because a Schedule C, think about it this way, it's one-sided accounting. It's an income statement with no balance sheet. The IRS doesn't know whether that's accurate or not. If you have a balance sheet, at least they know that if the balance sheet's accurate, your income statement has to be accurate. That's the way double entry accounting works. So the IRS wants to see a balance sheet, but you can't do that in the Schedule C. So instead, they have to audit you to make sure that your numbers are right. If instead you were, for example, an S corporation or an LLC, taxed as an S corporation, now you'd have a balance sheet. Now the IRS goes, oh, I see, there's a balance sheet. Well, this all makes sense. I don't need to audit this guy. What else happens? Not only do you not have a big red flag for an audit, but that $40,000, if you're on a Schedule C, you get to pay an additional 15.3% tax. That's over $6,000 of taxes that if you're in an S corporation or limited partnership, you might pay half of that or less. So why are you paying taxes you don't need to pay simply because, oh, it's just a little business, don't worry about it? The money adds up. Tell me you couldn't use an extra $3,000 or $4,000 or $5,000 or $6,000. See, how you earn your money is just as important as how much you earn. Because if you earn it, as I said, you earn it as a sole proprietor, you're gonna pay high taxes, big red flags. You earn it instead as a true business owner, and you let the IRS know, hey, I'm a real business here. I'm serious about my business. I'm gonna do the right things here. The IRS is gonna go, oh, cool, we'll leave you alone. Just go do your thing. And that's what they do. So that's why it's so important that you get the right entity. So if you're looking at your last tax return and you're thinking there's got to be a better way, you're absolutely right. In my free webinar, I'll walk you through how to legally cut your taxes in half or better using the same strategies I use with business owners and investors every single day. These aren't loopholes. They are real legal incentives, intentional tax benefits built into the tax law. And many of them were expanded under the One Big Beautiful Bill that just got passed. Click the link below. Save your spot now. And if you refer friends to sign up for the webinar, you get the chance to win a one-on-one with me or one of many other prizes. Be quick and sign up now because we won't have many seats left. Now, what's one example of something you're already spending money on that could become a legal deduction with the right strategy? I'm going to give you two. First of all, your house, and second of all, your car. Now, these are two things that everybody spends money on every single day. And most people don't deduct any of it except for their mortgage interest on their house. But what if you could deduct a portion of your utilities, your internet bill, your cleaning and maintenance, the repairs to your house, even a portion of the cost of your house? All of these become deductible when you have a home office. And by the way, don't let somebody talk you out of a home office because it's a red flag. It's a red flag because you have a Schedule C. You don't have a Schedule C, again, where entities are so important. You have an S corporation, there's no red flag to having a home office. Zero. The IRS doesn't even know you have a home office. There's nowhere to report it. So, home office, good. What else is good? Deducting a portion of your car. Well, right now, you may be using your car entirely for commuting, and commuting is not deductible. But guess what? If you have a home office and your commute is to your home, then that first drive afterwards to your business, that could be deductible. So, wouldn't it be nice to have expenses that instead of paying tax on your income before you make that expense, you pay taxes on the after amount. So, instead of paying on 100%, you may be paying only on 40 or 50%. That's going to make a big difference in your tax bill. Now, what are some of the investments, you ask, that the government rewards through tax incentives? Well, I will tell you, business is the biggest one. I just gave you an example of that. If you're an employee, you don't get a home office deduction. If you're a business owner, you do. If you're an employee, you don't get to deduct your car. If you're a business owner, you do. If you're an employee, you don't get to deduct any of your meals. If you're a business owner, you do. So business is certainly the biggest one. Number two, real estate. You own investment real estate. And I'm not talking about fixing and flipping homes. I'm talking about really investing in real estate, whether it's a duplex or a fourplex. When we talk about real estate, the biggest single tax benefit we talk about is depreciation. Why is depreciation so important? Well, think about this. You buy a duplex. Are you expecting that duplex to go up in value or down in value? Well, my guess is you're expecting it to go up in value. And yet, there is wear and tear on that duplex. Maybe not a lot. Maybe you've got really good renters. But the government, they're going to give you a deduction as if you had a huge wear and tear. But not only that, the new bill, you can take bonus depreciation. Why don't you write that down? Write that term down, bonus depreciation. Ask your tax advisor or your tax preparer about bonus depreciation. Look it up. Read my book, Tax Free Wealth. So let's say you buy a fourplex for $1 million. What if you could get a deduction of $250,000? You probably going to put $200,000 down and you get a deduction for $250,000. That's bonus depreciation. That is the magic of depreciation. You get a tax benefit so great, it could literally double the return on your investment. So depreciation, big deal. Now, what's the number one reason tax planning as early as March or April, it's already too late? Well, it's because you're missing tax benefits every day you delay. You can start getting tax benefits January 1st for this year, January 2nd. Every dollar you earn is either taxable or not taxable. Every dollar you spend is either deductible or not deductible. Well, you can't go back and make it deductible in the past. You can't go back and make it non-taxable in the past. So all of that income you're earning, you don't wait. Don't wait to do a tax strategy. Don't wait to learn how the tax law works. Don't wait to work with a great tax advisor. Start your tax planning today. Every day you wait, you are giving money needlessly to the government. Is that really where you want your money to go? I ask you, who's a better steward of your money, you or the government? Now, if you think the government's a better steward, I think you should not be watching these videos. I think you should be paying as much tax as you can to the government. I just have never met anybody who feels that way. Literally not one person that says they would like to pay extra to the government. So why are you waiting? Don't wait to learn how to reduce your taxes. If you're thinking, can I really do this without getting flagged by the IRS? That's exactly what I cover in my next video. I've handled dozens of IRS audits, and I'll show you exactly how they know when you're lying and how to stay protected while using the strategies that we've been talking about. How to avoid looking like you're lying. That's really the key, right? Because they're trying to catch actual tax cheats. But sometimes we report things on our tax returns in such a way that it makes us look like tax cheats. Those are what we call red flags that we can eliminate. Now, if you have a true red flag, that's simply, don't be cheating. Everything we want to do it legally, ethically, and morally. Click the video on the screen right now. It could save you thousands and give you the confidence to finally play offense with your taxes.